This is Mark Anthony with Mercury Time Price Analytics, and this is the daily video update for crude oil futures. Interesting little bit of trading Friday into the Sunday Globex Open and into the holiday shortened session. So our algorithm got long Friday afternoon. It was 3:12 Eastern time, and I thought it was interesting because our bond algo triggered long at the very same time. So, you're wondering, is there something geopolitical that may happen over the weekend? We did get this Globex spike up, and there was a Nigerian pipeline that was destroyed over the weekend. The algo triggered long right in here about 58.60. And so on Sunday, right in the Globex Open, you had to trade up over $1 from where the algo got long. Now, trading crude oil is inherently risky. With our systems, we try to minimize the risk as much as possible by giving you algorithmic time price pivots to help you manage the trade, let you know if the trade is going in the right direction, and to help you manage by taking partial profits along the way, limiting the risk for the remainder of the position. So what you see on here is our proprietary algorithmic daily bull bear pivot. This is the pivot for Monday the 20th when this video is being recorded. The daily bull bear pivot was 58.95. We also have our proprietary X5 pivots. Now, every pivot that we put on the chart is based on a mathematical time price algorithm. We never manually put pivots on the chart. We never look at the chart from a technical analysis perspective and say, well, that looks like such and such a pattern, so we're going to put a pivot there. Everything is a mathematical algorithmic pivot. And to show that to you, I'm just going to pull the chart back out so you can see where the algo is pulling the data from to generate these pivots. Should we go one more? No, it's a little bit too big. But you can see on this screen, by the way, you can see this move off 65. The crude's trying to put in a tradable bottom. But if you take a look at it here, what our algorithmic pivots will look for is one of three things. They'll look for support or resistance, or they will look for price congestion zones, in which case the algo is programmed to cut right through or bisect those congestion zones. So here we have our daily bull bear pivot, and you can see at one point we had some support in here, came down, tested it again, and eventually that area broke. And that was Monday of last week. And so for today, this is the price level. This is where the algo is pulling this bull bear pivot from. If we take a look at, and I apologize for this jumble over here as we scroll this back, but I want to show you where the pivots are pulling from. So here we have our X1 pivot at 59.05. That's pulling from cutting right through this congestion zone. Down here we've got our X2 pivot at 58.41. Where's that getting the data from? Well, you had price come down into here and then come back up, and then you had this congestion. So it's cutting right through this congestion zone here, which then later on in the week became this support level here, here, and here. And so the reason we program the algo to not just look for support and resistance areas, but to look for price congestion zones, because previous price congestion zones become future support and resistance zones, like you see right here. So there's a method to the madness. Now down here we've got our X4 pivot at 58.16, we've got our X3 pivot at 58.17, and that cuts through all of this. And so just looking at the pivots, we had this big move down from 65, and then you get this move up into right at 59, and then you get this move down that now is finding support at what was this congestion zone. And it's the same area of support we saw here and here and here. So when we know we've got this congestion zone down here that's lower, and this area has been tested multiple times, and then right there, if you were to just drew a makeshift trend line, you take that out, well, that's where you get this move back. So Crude is trying to put in a bottom here. It's inconclusive yet, but that's where the algo is pulling these pivots from. Now, what the algo is also designed to do in terms of these pivots is to give you areas where you can take profit, and that profit, in that sense, we call these profit capture pivots. So you've got this move up over $1 from the algo entry on Friday. Now, a prudent trader would have taken some off the table up in here. You don't know whether this is going to keep going higher or whether it's going to reverse the whole thing. So you take that as a gift, you take some profits up in here. Now, why didn't the algo get short here or here or here? Well, because in order to build an accurate algorithm, time is much, much more important than price. I mean, price is linear. I mean, hypothetically, price starts at 0 and goes to infinity. So how do you build an algorithm that's anchored to price when price can go from 0 to infinity? You can't. And that's the reason a lot of algos don't work. I mean, they might curve fit them to show you that they worked in the past, but there's no predictability if it's not anchored to time. Look at a clock, it's round. There's the same number of minutes, hours, and seconds in every day. There's also the same number of minutes, hours, and seconds in a trading day. Now, the day we record this, of course, it's a holiday shortened day, but you can anchor an algo to time because time has cycles, and that's what our systems are based on. So the algo flipped short 3:12 a.m. because at that point, from a time perspective, this was cooked enough. Imagine if you've got an algo that's built just on price. Well, when it goes up here and does this or this or this, if the algo is just built on price, it's essentially has to guess whether this is a pullback to support that's going to go higher, or whether this is just a one big head fake that's coming right back. You don't know if you don't anchor it to time. So after enough time has been elapsed, and after enough price data has been compared to the time mechanics, it goes short here Monday morning, early 3:12. Now, here's where the algorithmic profit capture pivots come in. So you don't know, if we pull this back, and you see this action down here, Friday we had the low at 58.31. Sunday Globex, you open up way up here, 59.78.80, and then you get this move back down. So at this point in time on the chart, you don't know if this is just closing this gap and going higher, or whether it's going to continue to go lower. And that's why these profit capture pivots are so valuable, because today's X5 pivots at 59.05. So the algo short here, you could have taken a little bit of your profit right here, move the stop either to your entry price or a little bit higher. So even if that thing reverses, you've protected your position, and it's not going to turn into a loss. Now, what's interesting, here's what told you, forgive me, that the trade was likely going lower. Crude comes down into this X1 pivot at 59.05. It has just a 1 bar little jog back up, and then it comes down and it breaks below the X1 pivot. And on the next bar, it doesn't pause at the bull bear pivot, which we saw when we pulled the chart back was a very important price point. But it didn't even pause here. It went right through. So on the check back, it breaks through the X1 pivot, it breaks through the daily bull bear pivot. And what happens is that opens up this next pivot level at 58.89. So now ES comes back here. Now again, hindsight's 20/20. But what happens if you don't have an algorithm that gives you this this incremental information as you're in the trade, these pivots, and you come down in here? Well, at this particular point in time, you could say, all right, well, it closed the gap, and now it's just coming back here to retest this, so I'm going to try to flip long right here. Well, the problem with that is you're always going to have early profit takers. So people that were short anywhere in here or in here or in here, they're going to take some profits along the way. And when those early profit takers take profits, then you get a back test. Now, where did the back test stop? It stopped right at the X1 pivot. How accurate is our algo? I would have to say that that's pretty accurate. So it went up into it once, twice, 3 times, 4 times, and then it rejected. And once again, the daily algo bull bear pivot, it didn't pause, it went right through. So now you're back into the X5 pivot. And it comes down and it doesn't respect this. It makes a lower low in the context of this low here. And once again, let's move the chart right to that particular point in time. All right, so now we've come down here. We've made this low. We've come back up. We've come back down again, and you see this really nice long green bar, and you're like, all right, well, all they're doing is they're just running the stops right here. So I'm going to go long right here. Without an algo, that's a guess too. And I know sometimes these long green bars as well as these long red bars can be enticing. But the problem is, it didn't respect either of the daily pivot or this pivot here. So what happens? Yeah, you get a little bit of a bounce here, but where does it stop? Just like this bottom here, or not bottom, this price level, stopped dead in its tracks at the X1 pivot. Where did this one stop? It stopped dead in its tracks at the X5 pivot. And so when I say that there's heavy-duty time price mechanics that are built into this algo, I'm not just saying that. That's the reason why these pivots will have price go to them or check back to them. I mean, literally to the penny in many cases. And right here, if we zoom this in, look at where the rejection candle came. Right there, exactly to the penny at that X5 pivot at 58.89. Can it possibly get more precise than that? So that's the way our systems work. They give you a beautiful combination of a rock-solid time price algorithm with the incremental feedback that you get from the X5 pivots and from the daily algo bull bear pivot. And when I say a rock-solid long-short algo, I'm going to show you in a minute, but before I do, we take the guesswork out of how this works. We do the grunt work for you. Our subscribers have access to a live chart feed on Zoom, so they're seeing this in real time. When our algo runs these pivots, our traders don't have to take these and put them on their own particular trading platform, although they can certainly do that. Because once the pivots are generated, we overlay them on the price chart. So as you're watching the live chart, it's all right there for you. You've got the algo moving up and down, and you've got the mathematical time price pivots right there on the chart. But we do provide these pivot levels to our subscribers, and they get what we call a data sheet. And we do this for bonds, we do this for crude, we do this for our ES and NQ futures subscribers. Now, bonds has an additional pivot methodology, what we call our Mercury bands. But in this video, we're focusing on crude. So you've got your X5, X4, X3, X2, X1 pivots. There's a new one generated every morning. So tomorrow morning, when the new X5 pivot is generated, the X5 pivot from today becomes the X4 pivot tomorrow. And the X4 pivot from today becomes the X3 pivot, and so on and so on. 2 becomes 1. The X1 pivot from today drops off. So it's a running 5-day algo look back. Pivot 5 is the newest, Pivot 1 is the oldest. And then we also provide right in one little data sheet the single daily bull bear pivot for bonds and crude. By the way, the reason we put this together is we package bonds and crude together. We found that there's a lot of traders that trade bonds that also trade crude and vice versa. So it's one subscription, you get both. And we've priced it low enough that if you just trade crude alone or if you just trade bonds alone, I mean, it's ridiculously low for what we give you and for the profitability of the system. And I suppose that's a good segue into this. All right, here's crude oil. And this just goes back a couple weeks. I mean, this is just crazy. Long 61.46. The algo flipped short at 64.19. Now, remember, that's what those profit capture pivots are for. So you're not waiting until the algo flips to get short. You're locking in profits as this move develops. So long 61.46, short 64.19, back long 62.85. You get this big move up, and I said this earlier, and this bears repeating again. If an algo is based on price, well, it doesn't know whether this long red candle here, or this long red candle here, or this one here, or this one here. It doesn't know if any of those are just a normal pullback that's going to find support and go higher, or whether it's going to reverse this whole darn thing. And that's why you have to have the time component, not just have a time component, but have it just spot on nailed. So the algo knows the precise time cycles where this thing is cooked properly. And by cooked properly, I mean every one of these bars, it's checking price all throughout that bar, because this thing will move. These little hashes will move as that price bar is developing. But it's constantly analyzing the time-price relationship and comparing it to multiple time cycles. And I mean, these are the time cycles that the market runs on. And so when this thing is fully cooked from a time-price perspective, then and only then is it going to flip short. So you had this long from 62.85. A prudent trader would have taken profits on a move like that, a spike up like that. And then it flipped short again at 63.51. And that was the big one. Short 63.51 all the way down here into the recent low at 58.12. And now it's trying to put in a bottom. And the algo, tried to get long on Friday. And what you love about this algo is, like, for example, if it gets, notice on these, it didn't get long here and then get short at a price that was lower. Okay, it gets long and then it flips short at a higher price. And when it gets short, it flips long at a higher price. And from this point here where it flipped from long to short again, it's going short from a higher price. Well, isn't that the way it's supposed to work? I mean, you don't want to be getting long here and find out you're wrong and flipping short 50 cents or a buck lower on crude. Now, if any of these trigger bars is a head fake, well, you'll know right away, and that because this algo is amazing at how quickly it auto corrects if there's a fake out bar. So that's the way the systems work. We invite you to take a look at our website, which is very simply mercurysignals.com. That's signals with an S. You can email me at markanthony, just like you would think it's spelled, markanthony@mercurysignals.com. If you go to our webpage, our systems are currently available for ESNQ, that's one package. Bonds, crude is another package. If you're watching this video and you trade Bitcoin, the Bitcoin algo will be coming out within the next day, it looks like. And that's just crazy. Keep an eye on our YouTube channel for the rollout of Bitcoin. But if you go to our website, mercurysignals.com, you can come in here and click on the ESNQ, and we'll have an annoying pop-up here in a second, but that gives you all the information, videos about ESNQ, I mean, this is as detailed as it can get. There's the annoying pop-up about how all of our pivots work pertaining to ES and NQ. And for crude oil, you can just hit the bonds crude. You can click the top menu, or we put a little button right here in the ES/NQ section. And we'll get the annoying pop-up here in a moment as well. But if you go to our bond and crude oil page, you can see some screenshots, that methodology, and to start a free trial, you just click here. Now, the way we do the subscription is you always get a 7-day free trial. We do not bill until after the free trial is over. So if you don't like what we provide, or for any other reason, look, there is no requirement. We don't say, well, you need to have a particular reason to cancel in the 7 days. If you don't like the sound of my voice and that's the reason you want to cancel, fine. You will not be billed. When the billing starts, we bill weekly, not monthly. I guarantee you there's more than a few traders that are listening to my voice, that are watching this video, at some point in time have signed up for a subscription service. And, you know, at some point you change your mind and, well, you've just paid for the next month, and what are you going to do? You know, if you change your mind one day into the monthly billing cycle, you know, you end up spending that money even if you don't want to use it. So that's why we bill weekly. That gives you the ability to, at any time, for any reason, if you want to stop the service, you can stop. And we do that because, number one, we feel it's the right thing to do. Number two, it holds us accountable to constantly try to improve our systems, make them as good as they possibly can be, constantly looking for ways to get you more accurate setups, to constantly help find better ways to manage risk. Because look, we can have a subscriber that's in our system for a year, and they can still cancel anytime they want. And then the third assurance that we give you as to how we run our business is that when someone subscribes to any of our platforms, whether it be the ES/NQ or the crude oil and bonds, you get a lifetime rate lock from the time you start. And so regardless of what future improvements are put into the system, regardless of what future pricing may increase to, you will never receive an increase on the system from the time that you started. Now, if you decide you want a bonds crude subscription, and later you want to add, you know, ES a year from now, and the price changes, well, you know, then the ES/NQ price is what it is at that future date. But anything you subscribe to, the prices will never change, period, end of story. So we just want to give you comfort that there really is very little risk in finding out if our systems do everything that we say they do. They do. We will literally put these algos up against any institutional algorithm anywhere, period. Whether it be our ES algo, our NQ algo, our crude algo, or our bonds algo. So thank you so much for taking the time, over 23 minutes now, to watch this video. We sincerely appreciate your time, and we thank you for spending a few minutes with us. God bless you, God bless your family, and we hope to see you back again soon.